we've got some massive goals for our planet, right? But there's this one huge question looming over everything. Who's going to pay for it all? We're talking about a sustainable future, and the numbers, well, they are absolutely staggering. But the solution might be a lot cleverer than you'd expect. All right, get ready for this number. It's $4 trillion. And let me be clear, that's not the total cost. That's the funding gap we're facing every single year if we want to hit the UN's Sustainable Development Goals and the Paris Agreement targets. Yeah, every single year. It's a massive hole to fill. Now, it's easy to look at a number that big and just panic, right? But check out this reframe from Marc-Andre Blanchard. He says this isn't just one of the biggest challenges we face, it's also the greatest economic opportunity of our generation. So the question shifts from how do we solve this problem to how do we unlock the private money that's ready to jump on this opportunity. And that brings us to the big idea here. How exactly do you build that bridge? Connect the world's biggest goals with the world's biggest pools of money? Well, there's this really smart model that's been gaining a ton of traction. It's called blended finance. So what on earth is blended finance? Let's break it down. At its core, it's about using a relatively small amount of public or philanthropic money, think of it as catalytic capital, to kickstart something much bigger. The whole point is to use that initial investment to attract or mobilize huge amounts of private commercial money for projects that move the needle on those big global goals. The best way to think about it is really with that bridge analogy. Picture this, you've got to build a bridge over a really wide, treacherous river. No private company wants to take on the risk of building those first few pillars in the deepest, most dangerous water. So public or philanthropic funds step in. They build those first risky pillars, and once that's done, suddenly the project looks a whole lot safer and more profitable. That's when the private companies come in, ready to build the rest of the bridge at scale. This whole de-risking process is the secret sauce. It's pretty straightforward, really. Step 1, that public catalytic money takes the first hit, absorbing the biggest, scariest risks. Step 2, just by doing that, the project's whole risk-return profile gets a major upgrade. It suddenly looks way more appealing. And that leads to Step 3. The private commercial capital, we're talking the big institutional investors, can now come in and pour money in at a massive scale because the project is no longer a wild gamble. Okay, so the concept is solid. It's working, and it's definitely growing. But, and this is a big but, it's on a collision course with a massive wall. We're going from billions, but we need to get to trillions, and there's a problem. And you can really see that growth when you look at the numbers. I mean, check this out. Back in 2014, we were at about 17 billion. Fast forward to 2023, and that number has shot up to over $213 billion. That is some serious momentum, no doubt about it. But hold on, because context is absolutely everything here. That 213 billion, it sounds like a lot, and it is. But when you put it next to the annual need, which is 4,000 billion, you see the problem. All the progress we've made over a decade is just a tiny drop in the bucket of what we need every single year. The scale is just completely mismatched. So this is the central mystery, right? If we have a model that we know works and we can see it's growing, then why the heck isn't it scaling up fast enough to make a real dent in that $4 trillion challenge? What's holding it back? Well, it turns out there are a few major roadblocks. For one, there just isn't enough of that special first risk capital to go around. A lot of projects still don't offer a good enough return for the risk involved. And if you're working in emerging markets, you've always got to worry about foreign exchange risk. But the biggest problem, the real bottleneck, is that there's no standardized playbook. Every single one of these deals is basically a one-off, custom-built from the ground up. And that is just way too slow and inefficient to get to the scale we need. Okay, so if the big problem is that we don't have a playbook, well, the solution seems pretty obvious, doesn't it? We need to write one. So let's flip open the pages of this hypothetical playbook and see what it would take to really unleash the power of blended finance. All right, first up, the fundamentals for any single project. To make one of these deals actually work, you need a few key ingredients. You've got to have everyone on the same page with clear, aligned goals. The people involved need to be credible with a solid track record. You need smart ways to manage risk, like using first loss capital. You absolutely need deep local knowledge. And finally, you need strong leadership pushing it all forward. You get those things right, you've got a successful project. But making individual projects work is one thing. To make that huge leap from billions to trillions, we have to zoom out and look at the whole system.
This is where standardization becomes crucial. We need templates and repeatable models so we're not starting from scratch every time. We need better communication so investors actually understand how this fits into their portfolios. We need market accelerators, things like giant consolidated pools of that catalytic capital. And of course, none of it happens without supportive government policies and regulations.
And look, this isn't something one group can do alone. It's a total team effort. You need industry bodies to create and share those playbooks and best practices. You need the big players like the UN and development banks to step up with more of that catalytic capital. You need investors and CEOs to become champions for this inside their own companies. And you need regulators to create an environment where all of this can actually flourish.
You know, this quote from Jennifer Jordan Saifi really nails it. She says this is an opportunity for systemic change, and that it's all about working together, leveraging our collective strengths to make a sustainable future possible. It's not just a fancy financial product, it's a whole new way of collaborating. Which leaves us with this final massive question. We've seen the incredible potential here, and we know what the playbook needs to look like. So is this it? Is blended finance the key that can finally, truly align global profit with global purpose? Can we use the engine of capitalism to solve our biggest shared challenges? Well, that really is the $4 trillion question.